Welcome back to the Joel's Auto YouTube channel. I'm your car guy, Dave, and today we're going to do something a little bit different. We're going to get into a little bit more of the nuts and bolts of auto financing, and this is going to be the first of a few series on different topics, and this is going to be on the type of financing that most auto loans have, which is called simple interest. This is not something that Joel's uses, but this is the most common type, so I wanted to start with this one first, but let's get into this episode, shall we, here on Joel's Auto. Thank you and welcome back to the Joel's Auto YouTube channel. And as I mentioned, one of the most common types of auto loans is called simple interest. The majority of car loans use simple interest. What it is a fixed percentage of the amount financed as the cost of borrowing the money. So it is generally referred to in terms of what's called an APR, which is what stands for annual percentage rate. And that is a percentage of interest per year of the loan that you get as a cost of borrowing the money. So let's say that you want to buy a car and it costs $14,995. You've gone to your bank and your bank will say, okay, we will give you 60 months in order to make the payments to pay off this $14,995. 60 months is what translates into 5 years. So you have 5 years of payments. All right, so we've already done the math on this, and this is just as an example. So the total interest paid over 5 years is $7,751. That is the cost of the finance charges for financing $14,995. So your total amount of payments over the 5 years will be $22,746. That's the price of the car plus the finance charges. So your monthly payments for 5 years are $379.10. Now, does all of that go to your principal? The quick answer, of course, is no. It doesn't work that way. Every time you make a payment, you're paying a portion of the finance charges, and you're also paying a portion of the $14,995 that you financed. And as you make these payments each month, more and more of your payment, as long as you're on time, will go towards your principal balance. So when you start out, you're going to see the majority of your payments going to interest, a little bit less to your principal. The number of days that pass since the last payment was made determines how much interest accrues and how much interest will come out of the next payment that you make. So the key to simple interest loans is to be on time. How do you figure out how much the interest is per day? Well, you can calculate that anytime. You multiply the current principal balance times the APR and divide that by 365. Why? Because there's 365 days in a calendar year. That will give you the calculation of how much the interest is per day at that particular time. So let's say you've made some payments on your car. You've got it down to $14,325. You multiply that times the APR, which we have to do in a decimal, which is 0.18, divided by 365 means your interest per day is $7.06. That means since the last payment was made, each new day adds $7.06 in accrued interest until your next payment. And as long as you make your payment on time and you're not really late with it, that $7.06 will drop. It might be $7.04, $7.03, $7.05. It will drop. But the point is that more of your payment is starting to go towards your principal as you go. If you make the next payment in exactly 30 days, the accrued interest since the last payment will be $211.80, which means when you made the $379.10, you subtract the $211.80, that means $167.30 of that $379.10 will go to your principal balance. What if you pay late? Well, more interest accrues. Because interest accrues daily, that means more of your next payment will go to interest. What if you pay early? More of your next payment will go to principal, not interest. It's the exact opposite. So, if you're late, your principal balance will be paid down less than what it would be if you had paid the payment on time. And that could mean it can take longer to pay off the account. And you risk paying more in finance charges than stated in the contract, because the contract assumes that you're going to make every payment exactly on time on the due date every single month for 5 years. If you're late, you risk paying more interest, which makes your loan more expensive. You're paying more for the car than you were originally going to do because you're late. You also risk getting a late fee, because a lot of contracts and auto loans have a late fee, which there's a grace period. And a lot of times it's 10 days, some days it's 7 days, in some states it's 15 days. It can vary from state to state, but they give you a grace period. As long as you make the payment within the grace period, you don't get a late fee. But if you pay after the grace period, then a late fee can apply. That also makes your loan more expensive, because you're paying more in fees than if you had been on time. So again, simple interest. This is what the majority of car loans use in the financing business. And it's not the only method that is used. Joel's Auto does not use simple interest. We use something called the Rule of 78. And we were going to go into that in another upcoming episode. But we wanted to start with simple interest because it is the most common that's out there, to give you an idea of how it works when you're making your payments, what to expect, and how your payments actually apply and pay down your account. And of course, remember, at Joel's Auto, our inventory can change daily. We're always getting cars in, and we always have something new to offer. Now, if you come in the lot and you see something and it's not what you want, you have your heart set on something else, describe what you're looking for, and we will find it. We will actually go out there and find it. For customers, we do have a referral program. You refer a new customer to us who also buys from us, you get $200 off your account. If you refer 10 customers to us who buy from us, your car is paid off. Great program. Stop in today so that the car that you have your eyes on comes home with you and not someone else, because somebody else could be looking at the car you're looking at. They might buy it before you do. So don't wait. Come on in. We do offer no credit check financing. Always have, always will. Down payments as low as $1,000. Drive today. Buy here, pay here. Live in the area. Have 2 pay stubs. Bring your license and your utility bill and insurance. Of course, check us out on YouTube. Please like and subscribe to this video so you don't miss any of our videos. Hit that notification bell so you don't miss a thing that we offer on our YouTube channel. We're located in Norfolk on Curlew Drive, 5700 Curlew Drive. We're right off of where 264 and Military Highway cross paths there. We're open from 10 to 6, Monday through Friday. Saturday from 10 to 2. We're closed on Sundays. And of course, you can always start the process and the buying process with us right on our website. Just go right in there. You can also sell us a car. If you have a car that you want to sell us to us, you can do that right from the website. You can also do the application right online, get the process started. We do in-house financing. Buy here, pay here. Always have been. Always will. $249 processing fee. We're at 5700 Curlew Drive in Norfolk. Check us out, Joel's Auto Norfolk, on our social media platforms, joelsauto.com as our website. And we're also on Instagram, Joel's Auto Wholesale. Next episode, we'll do some more vehicles that we have for sale. Check us out.